So I just want to take a look at a couple of things. Let's just start with basics. Hi, everybody.
Hello.
How are you doing?
Don't ask. Called
Okay.
oil.
Okay.
I tell you what, if you need a stock to go in the direction that you don't want it to go in, just get me to put a deal on it. Okay.
You need to come on my program.
I do. I was going to ask you. I was going to actually ask you for the advert. If you could just.
Right.
I thought this morning. My God, I need some help.
Because yeah, we're having great fun in the room at the moment. Yeah, let's just start from the beginning, and then we'll drill down, and then we can chat. I've got a pretty good. I know which stocks you're in and looking at, and I've got my watch list as well. So let's just dig in.
Can we talk about oil?
Yeah.
Who else is
let's just start from the beginning a second. Let's just look at the Nasdaq.
Okay.
Just to get a feel for what this market's doing. So yeah, we've got this long-term support line coming in from June 19 lows, touched it on October last year. So this is a key, real big line in the sand. At the moment, having dipped into it, we are trying to hold it today. So that's a positive. If we can close here, we've got, so that gives us hope that we could potentially come back to 90, 50, near 9,000. Who knows, maybe more. So this is even today is going to be a crucial close. As if we back off here, that leaves us vulnerable to pull back to 8,200. So yeah, we've seen some. I was looking at the way in which we came up here after the close, after the cash close, on the back of just some Trump comments about reopening everything up, and the market didn't believe it and has sold it ever since. We've been pulling back ever since. So having dipped back to where we broke up from, particularly underneath this level. Oh, hang on a second, I've got somebody who needs to join. One moment. Okay, just scaling out of some beans. Right, sorry, where was I?
You were talking about the Nasdaq.
Everyone can get in. Oh, yeah, he's trying. I think he's trying to come in the wrong room. Okay, fair enough. Right. So, so I was saying, yeah. So we got hyped up on the back of a post-close comment or press conference from Trump, and we've not recovered since. So, we're talking over the last few sessions about how critical this level is, and here we are at a critical level. Today in the Dow, we shorted these highs. Most of this selling was done overnight in yesterday's move, not in the cash session. So shorted around about 500, just 100 pips above this, and I just think this 2019 low could be proving to be a big magnet, holding the 20-day average. So it's balanced. If you look at the weekly, we're just very, very balanced right now and not getting any direction. So we closed right into that resistance that I got zoned, and now we're keeping underneath it. So hence the reason why some stocks are struggling. So with that, let's have a look at some of the. What do you want to start with, Elizabeth? Jessica, sorry.
Oil.
Oil, right.
Just to start and finish with oil, yeah.
Yeah, about 3 weeks ago, I said oil was coming down to 15,
Yeah.
to 14. And when I closed the rooms, before somebody closed the room, they said, I've just bought oil. So trust the charts, and they'll obviously we saw $8 yesterday, amazing.
Exactly.
But have you bought a dip?
Right. So what's happened is I bought. So I missed the dip on. I missed the dip that was coming into. I made a little bit on the, when it crashed completely the other day.
Yeah.
I made about 300 quid.
Okay.
And then I bought some, and then I missed the main West Texas drop yesterday because I went out for my daily bike ride. And by the time I came back, it was all over. So, but then I noticed that Brent was the difference between Brent on the 30th of April and the West Texas price was just crazy. West Texas was down at about 10 and Brent was still at 25. So I bought Brent and it went down like a stone and it was good, and I made, and then I didn't sell stupidly when it bottomed out, and then it suddenly shot up. So that I was in really negative territory, and I just left it overnight and thought hopefully something will happen. And overnight the Asian market pulled it right back down, so I was up quite significantly. And again, I didn't sell, thinking it will probably go a bit lower because I couldn't see any logic behind the Brent 30th of April futures getting any higher. It just didn't seem logical to me. And then I was just getting a bit jittery and I decided to sell. So I sold. I'd actually bought 4 different lots at different prices as the price was coming down. And then when it got to like 9:20, I thought, I think it's 10 or something. I thought that's it. It was 17:20 and I thought that's it, I'll sell. And I sold one lot, and then just as I was programming in the others, it suddenly shot up to 1,800, and I thought, I'm going to wait till it comes down. And then since then, it's gone up to $20 a barrel, $20 now, and it keeps trying to come down. And I just, I'm beginning to think that there's quite a lot of intervention going on in the market.
So just to clarify, what are you long or short as we speak?
So I'm short.
You're short, right? Okay.
I'm short and negative.
Short yeah.
I've got 30th of April Brent, and I've got one lot at $18.03 short, and one at $17.95, and the current price is $20.83, and it keeps going up.
Yeah, you've been playing a very dangerous game.
Okay.
Very dangerous game.
Well, why is it dangerous? Okay, explain.
I think what on a fundamental level, the US, what Trump said some weeks back was that when the opportunity came, they would fill their boots and top their reserves up.
Okay.
So what I think has happened on a fundamental level is, we've seen this was a good technical collapse. We had this sort of pincer at price action here, and we got the collapse. And I think we just got to a stage where I think it's all over short term. I think it's all over, and it's got to such an unbelievable psychological level that it's just, we're seeing profit taking on one level, and some buying of reserves on another level. So I think on pure technicals and nothing else, completely ignoring fundamentals. Here's the major breakdown. We leg it down, and then once we get to 3 tests of this trend line here, that's a 3-wave reversal. So short term, the move's over. So you get a 1, 2, 3, 4, 5. At the moment, we're getting a 1, 2, potential 3-wave corrective move. We're still in the process of a corrective move at the moment, having had a 3-wave reversal. So on this is a really good textbook breakdown, textbook shuffle at the lows, and now we're getting corrective waves at the moment.
I'm just thinking of the fundamentals, and the fundamentals are that everyone is, I mean, all the commentary I'm reading is that the West Texas reserves are pretty much full. Demand is not going to increase. So the position is not going to get any better by the 21st of May.
I totally agree.
And therefore Brent on the 30th of April, who is going to be buying, who's going to be buying Brent futures at $20 a barrel when West Texas is probably going to be at 10?
I totally agree, but you know what, the market prices that in. The stuff, if you look at okay, let's go back to fundamentals a minute. The Russians need $44 a barrel because it costs different amounts of money, you may or may not know, to dig oil out of the ground or to get oil out of the ground. In Russia, they need 44. The frackers, I think, need above about 22 in the US. I think all these different levels come into play. But the bottom line is, I mean, I think from what I read, the storage is getting close to capacity, but I don't think we actually, not convinced we've reached capacity. But so that's some fundamental levels. But I think at the end of the day, this is all one of the things that created this avalanche, this breakdown, was the rollover in the contracts. So that's one of the reasons why this completed, because once the contracts roll into the next month, you get this natural, everybody who's in the old contract and needs to roll over to the new needs to release themselves from the old contracts and then engage in the new contracts.
And they have to take delivery of the oil physically, don't they?
Yeah, exactly. So you've got all the guys who actually want delivery of it, and who are, and the main sort of market makers and the main dealers in it, sort of emptied the bucket of all their stock and capitulated here. Had to buy their contracts back when everything rolled over. So all those contracts got bought back as it rolled over, creating this bounce. And then the new bucket was opened for the new month, and at the moment it's still sort of getting balanced as we get into the new monthly contract. So what could happen is, assuming that we might find some more selling as we get into this sort of 25 level, or if we break above 25, we could come a full push back into there. I think the most likely scenario is we'll knock against that 25 in the next day or two, the next week or so, and then potentially leg it back down again.
Okay.
That's a sort of basic, a basic sort of technical level. If you're short, I think keep your stop above these highs, assuming you want to do that, and you're either bail out or keep your stop above those highs. That's the kind of decision I think you're faced with.
Okay.
But I think once these markets get to extreme levels, and once you get to the contract end, you inevitably get a bounce. There's always that risk that this is why I hate. I was saying to this the other day. Somebody was on. I said I hate shorting oil. Somebody said, why, Mike, why do you hate shorting oil?
Yeah.
The reason why I hate shorting oil, because all it takes is one rocket from Iran and the whole thing just explodes up. Now I know that's not rational, but that just happens to be the way I treat oil. I just steer clear of the shorts, and if it's not giving me any buyer signals, then I'll go away and find another market that is. But that's not a logical, rational, technical, professional way of trading it. But if I were to short it, I want to make sure that I'm as short as with any market. I short as high as I possibly can.
Yeah.
I made a mistake of shorting the Dow close to the lows yesterday. I was very small position, quickly got out when it was wrong. But today I did the complete opposite. I shorted, wait till we got nice and high and shorted the highs, and that's what I'm comfortable with. If I am going to short something, I want to get as nice as high as possible. You were getting short when in the process of this bounce, basically, by the sound of it, without wanting to get into specifics. So be careful. Watch out. The pure technicals and the fundamentals of the mechanics of the market would suggest that we could get some sort of bounce here. But equally, we have got some sell signals here in this 1 hour chart. It is a really bearish market. It is costing suppliers to get shot of it. So all the time that we have some red bars in here, we could still crank our way down.
Is there another question that I've just noticed that the Asian market seems to always drive the price down? Is that a thing? I'm wondering if governments are intervening to push the price up, and especially like the UK government. And
it's not so. I tend to avoid these sort of these theories.
Okay.
It's not so much that governments are trying to prop oil up. That's not in their interest. They've got far bigger fish to fry than propping oil up.
Okay.
What is happening is central governments tend to have reserves, and the central governments are, and Trump openly said that he would dip into oil when the time was right for their what they call strategic reserves.
Mm-hmm.
So I am quite sure that when oil crashed yesterday, there was some government, not intervention, but some government buying of strategic reserves going on.
Mm-hmm.
So be careful.
Yeah. Well,
I just hope you're not. Anyway, enough said.
yes, learning the hard way. Yeah.
Yeah.
I mean, I did really well until, if I'd have got out of it this morning when I wanted to get out, I'd have been a few thousand quid up, so I'd have been fine. I've got a massive positions, so I'm losing tens of thousands, but it's just like I kind of am aware I don't really know what I'm doing. So, okay.
Let's. Okay.
Big advert for Mike's lessons.
Yeah. I mean, one of the things that I've been looking at and keenly waiting on is this one. I think this is sort of perfect storm for me. Massive, it has been in recent months and years, or even the last few seasons, massive oversupply of soybeans. But we had crop reports yesterday, so I was anticipating this kind of move yesterday, and that's what we've got. So I have been just currently waiting for some further dips back into this $8.25 before I think we finally could get a shift up. But ultimately, I'm going to get position on these beans and hope that in this apex here with some further buying into dips, that this one can break out. This is a daily chart, so I'm hoping to get into $8.50, $8.70, and ultimately the back end of the year, if we can get the dollar to calm down, which is a big if at this stage, $9 and $10 plus. So that's something I'm looking at. And I meant to something occurred to me. The flip side of this oil has been gas. I think what this is an unseasonally unusual pop-up in the gas market, and I think what's happening is the gas producers and buyers are panicking that this crisis in the oil, and it is a crisis, could have a reverse effect for gas. Because if the frackers stop, the US has become a major exporter of gas. So if the frackers turn the taps off, that immediately has an impact on the gas. So I think whereas we had gas crashing, we can see we've got a divergent relationship with gas. So one of the things you could be doing is benefiting from this little nice technical pattern in the gas. So I think we might find ourselves. The move is potentially over at the moment, because this 20 is a major area. But if this push higher is subsequently dips back into this zone down here, as we get towards the sort of gas seasonal buying period in sort of June, July, the gas could see a nice upside in the second half of the year. So keep an eye on that one. So commodities have had a tough time. The last commodity boom was some time ago. So I think there's some very interesting markets, some very interesting things happening in the commodity market. One of the things I did do yesterday was buy gold. If we have a look at the gold market here, this is my analysis I've been looking at on the gold. I got in a little high, so I didn't post it in the room, in my alert room, because I got in a little high, and I don't like getting high. It's the last thing I want to do is to get guys in my room in too high. But I saw this little nice trend line pullback that was taking effect. We've got a nice higher low here in around about the 1670, 1680 mark. So I took some gold off at 1705 at this March 9 high, and now think we could see 1770 plus. This is an incredibly bullish move up here, and interesting just to pick up on what I've talked about. Well, I'm always talking about Elliott wave because I'm such a massive fan. I talked about it in terms of how the oil crash unfolded. Well, look how this gold bull market has unfolded. What you don't see here on the chart at the moment, and I'll try and correct that by getting a lot more data on the screen, is this massive upsurge and breakout pattern to our left in the back end of 19 and early part of 20. So once the market saw this three-wave reversal, so the second time today I've talked about three-wave reversals, market ran out of steam up here, and took a decent plunge with a very strong dollar all the way back down to this breakup area. So we got a reversal pattern up here, a little squeeze, punched up to resistance, pulled back to this main central band here, 50% of this whole move, and then we just start winding back up again. So all we've done back here at this is a key structural point in gold at that particular pivot, and we're currently still not holding back, still looking as if we can at least come back to that 1750. And ultimately, if this really pans out, we could find ourselves all the way up here at 1770 and ultimately 1850 plus. So this 1705 is a major area now. If we start holding up here and get a dip into 1700, 1705, that's a really good area to potentially engage in that market. So that's some trade ideas for you. Pan out. This is a 20-day average and an 89-day average. The 20-day average is a nice, clean, smooth line up here. So looked pretty horrible over the last week or so, but this push right down to that structural support has really got the buyers interested. And we got, and on the daily chart, I've got 1856 up here, based on that one. Any other commodity? Let me look. Anybody else in any other commodities before I switch subject? I was taking a look at sugar. If I'm right about an uptick in the commodities market, then another candidate could be sugar. Very heavy selling off of this 435, right back down to a key area here. So at the moment we're bearish, but if we start popping back and closing above 330 and particularly 340, I think this could get a pop. But the overriding factor is going to be this. I'll now look at the bigger picture for a second. The overriding factor is going to be what happens to the dollar. So we saw this massive liquidity issue in the markets with the virus demand slump issue. That created demand for the dollar in this initial push up from March and March 23rd highs. So this is the markets, the reversal in the markets was strictly divergent with this breakdown in after that push up in the dollar. So if we see continue buying in the dollar and we start closing above this level here, that is going to present a lot of problems for everything from oil to the indices if this punches back up. And we have got a really good buying pattern down here at the moment, so we're above this triangle. So into the back end of this week and into next, this is one to really keep tabs on. Big day tomorrow because we've got a lot of manufacturing data across Europe and the US. I think it might be the US as well. Certainly right across Europe, we've got manufacturing data coming in tomorrow. So that's a look at key commodities like oil across gold and some softs. We've had a look at the tentative position of the indices, particularly the Nasdaq, and the way in which this dollar is reacting. So not an easy market for stocks. So let's have a look at, stop me at any point if you've got any questions or any other specifics. Now, Jessica, I know you have had a lot of interest in the banks. Yeah. I am beginning to get interested in this Barclays now.
Are you? Okay.
I talked about this level when we last met, and we have a potential a little subtle buy signal there today. So overall, as I've just expressed, got a lot of concerns with what the markets are doing. I would start to nibble on Barclays, but get out if we didn't close above that 92. Because what for a bearish scenario is, if this is a bearish consolidation pattern and we knock into that area, that 92, it could roll over.
Is the buy signal because we're closing higher each time?
Because the buy signal for me is that I've got this key zone here that I'm interested in. We broke up from here in this zone here on this area. On another history of, we've just got a history of coming up from this area. So all the time we hold this area, I think there's a decent chance the buyers will buy and hold and take it back into to reconnect with that trend line up there at about, what's that, about 110, 115, 110-ish.
Yeah.
But close back into this zone, and particularly obviously coming out the other end of it, and we're going to hit the lows again, we're going to hit the floor again. So I'm prepared to go in a half position and add to it if we close above 92, but it's on my sort of warning list. I've got, the only way I'm going to hold that is if that closes above 92, 92.50.
Okay.
Lloyd's, let's have a look at Lloyd's. Obviously, we're still really in the midst of the US earnings season.
Now, again, going back to fundamentals, my understanding from today is that the oil spooked everybody on Monday and Tuesday, and then on Wednesday, and then today, that the markets, to my take of them, seem to be in quite a bullish mood, but they kind of went to this reversal Monday and Tuesday because they thought, they had this shock news that oil's suddenly gone negative, and everybody went, God, what's happening? And then they've kind of digested that, and they've read about it, and they've understood that this was actually a technical thing to do with storage in West Texas, and
technical in market trading terms because of the contract rollover.
Yes, okay. And so, but I mean, there's an awful lot of people, I believe, a lot of kind of amateur people in the market, like me, and I think that we're not all looking at the technical trading, and I just think that a lot of people pulled back on this. A lot of people pulled out of this, but have suddenly gone back in and said, "Yeah, okay, let's get back in," because that seems to, the stocks seem to have had a much better day today than they had Monday and Tuesday, and that seems to be the commentary that's coming on Bloomberg and FT, that they're saying that stocks seem to rally a lot more today because sentiment seemed to be a lot better. Does that sound about right to you?
I just think overall this is a really difficult time for markets because we've had this rally off the back of the third week in March reversal, but all we've done is rally right back into key resistance areas.
Yeah.
So just if you take an example of, let's take a common stock like let me just get into this. Okay, rather than jump to a list, if we just take a Dow stock like Goldman Sachs, we've just seen some technical profit taking at those highs. If you were buying down here in this late March reversal and you'd held into that 187, 190, you're going to take profits. So at the moment, we're just seeing this general, to my way of thinking, the initial rally's been and gone. We're seeing profit taking, but at the moment, there's no significant buyers at these levels.
No, but it hasn't. But I think the key thing is it hasn't tanked as much as.
No,
it hasn't gone back to where it was before.
I mean, the way I read the market at the moment is, I think a lot of people, including a lot of institutions, are just sitting there thinking that we're getting close to the time where some restrictions have been lifted. Obviously, China, when it started lifting first. Other parts of Europe are talking about lifting. Berlin have been one of the most successful, or Germany's been one of the most successful partners in Europe of containing the virus. So the market is hoping that we're going to get some more news on greater levels of restrictions being lifted.
Yeah.
And so they're not selling, then they're probably taking some profits, maybe holding on to a position in the hope that it gets another lift through these resistance levels.
And also starting from such a low place and with interest rates so low that there's not a lot else to invest into.
Yeah, there's what's the old, what else are you going to do with your cash?
Yeah,
you can't stick it in the bank because
and also so many people having lost so much money are looking to try and make some back, surely. Well.
My son had a letter the other day from his pension company to say they lost so much money, he needs to increase his contributions.
Exactly. So I mean, I would have thought that everyone's working double hard to try and get it back. So, but I mean, the comfort to me on the fundamentals is that, we if you look at Goldman's just as an example, where it was in in the worst of the worst, what it dipped to 140.
It's down there at close to 130.
Right, it had that rally, and it's kind of gone back to itself, but it hasn't gone back half as much as people thought it. You know, it hasn't gone back anywhere near to the 140s, 130s. So it seems to be a thing that, you know, people understand that markets go up and down, but it hasn't gone right back to where it was before. And more bullish.
I'm with you, but I still looking at Goldman's alone, I still think I don't think significant buyers are going to come back in until we hit around about, you know, to reconnect with this 20-day average, and this pink zone.
Yeah.
So whilst you know, markets are driven by technicals, pure and simple. Yeah, 70-80% of all the trades that are fired in the markets are done by algorithms, not traders. Those algorithms are written by institutions, but technicals totally dominate. So I think until we get a technical move back into key levels of support, I don't think that there's likelihood is that Goldman's won't see any further uplift at this stage. So I'm not suggesting at the moment. I'm not suggesting Goldman's could sell off.
It's a hold, basically.
But it's a hold, and it's a hold to neutral position. With people, you know, people like me sitting on the sidelines waiting for a bad hair day, that drop into the pink zone.
So talking about bad hair days, do you want to have a look at BT, because it's gone to?
I keep a very close eye on it. I again, just as with Barclays, it's got to the point where I am looking to dip my toe in the water with this one as well.
I thought when it went to 115, I thought, oh, Mike will be happy because
it's not had a higher close, but I'm happy to start you know, buying a half-size position on a dip tomorrow, particularly once we get all this manufacturing out of the way. So if we get some bad manufacturing numbers and we start dipping and holding some support, then I'll risk a small position. I'll start buying. So let's maybe we can get a bad hair day tomorrow, dipping the likes of that Goldman's and dipping the likes of this BT and Barclays into some nice support levels, and I can.
So you say buy BT on about 110.
If we see it, I'd love to see that sort of go back under that pink zone into 110 area if possible. If it means me waiting and buying a little bit higher, I'll do that. What I don't want to do is buy a falling knife.
Yeah. And Lloyd's, can you have a quick look at Lloyd's?
Yeah.
We're watching.
I much prefer Barclays.
Although Lloyd's has held, hasn't it?
Yeah. There's not a lot between them. The same technicals apply. If we can dip a little into this, 27, 28 tomorrow on some bad news, and what's going to be crucial on a day like tomorrow is how we actually go into the 4:30 close.
Yeah.
So I wouldn't sit there holding a knife. If I did that with beans on Monday, I got into beans too early on Monday, so I got out for a small loss and then waited till the crop reports were out. Anyway, so I would want to see how we close tomorrow before really wanting to hold anything in a market like this. But we're looking okay.
Can I just ask a question as well? You
ask any question you like.
You mainly are talking about buying, not shorting. Is that what you prefer to do?
No, I have a completely separate day trading trade plan.
Okay.
I have a completely separate investment trade plan, and contained within my investment trade plan are several strategies to manage whichever part of the cycle we're in. But I have completely, and I have had for at least 5 years, I've had a bear rating strategy for certain sectors of the market. So and that, you know, in a bear market we're in now, that is coming to the fore. So the different component parts of my trade plan mean I do different types of scans at different parts of the month and the cycle.
Okay.
So
But
at the
right
moment,
now,
I'm only talking about buying in certain sectors and in limited levels on good quality stocks in sectors that have somewhat stabilised.
mhm.
But the other sector I'm getting interested in is I traded this Premier Foods a lot over the years. I've missed this move over here. Yeah, Premier Food. I was trading Premier Foods a lot at one stage. So I'm interested in the food stocks. I need to do some more scans on, particularly, obviously, the US food stocks. One of the things that interests me on a front, coming back to the grains at the moment. Let's have a look. Beans are sort of dipping into this close, but one of the things that can seriously affect these grains and had a massive impact in 06, 07 in a huge commodity bull run was weather.
Was what?
Weather.
Weather.
And the US grain belt in 06, 07 had horrendous droughts. And one of the things that came across, or has been coming through in the crop reports of late, has been extremely dry weather in the US grain belt again.
Mm-hmm.
So that fundamental aspect could have a big impact on how this commodities like the beans and wheat, etc., could operate in the coming weeks and months as we start to get some more data on yields, crop yields.
Mm-hmm.
So just aside of all the technicals, the chart technicals I talk about, the tradeonomics is a big part of my investment trade plan, and because I mean, if I think back to when I started trading, started taking my first trades in 1984, I traded I but fundamentals. Some aspects of I would look at cycles. I guess the most technical type of trading I got in terms of the sort of trading I did in my early days was just trading cycles, annual cycles.
I imagine everybody does that, don't they? Everyone gets into this and looks at
Yeah.
it, doesn't, as you said today, I mean, something that's new to me is you just said that 80% of all trades are placed by computers following algorithms, which I've kind of worked that out because you see that the market hits a certain point and suddenly whoosh, there's a whole sea of bids coming in, and you just think, okay, so that's, the computer, there's obviously, it's hitting certain triggers, and suddenly there's a great big push up or push down.
Because when I first started technicals, there used to be volumes written on candle patterns. Most of those candle patterns are a complete waste of time now. Those books are redundant because algorithms are long since taken over. So markets move in much sharper moves now. You have to really do your homework to find where I've worked out where I think the algorithms take their lead from, and so I exploit that as much as I possibly can. Hence one of the reasons why I was buying gold on those dips yesterday. And I think that's the key to my technical trading now. I hunt to the point to try and find the point in which I think algorithms are going to kick in. And one of the aspects of algorithms, one of which these algorithms are programmed, is nice and simple. It's just pure volume. This is why you can see some really odd extreme moves now, because once these algorithms pick up kick in volume, you get violent extreme moves that way overshoot what you would have ordinarily seen prior to algorithms. Hence, one of the reasons why I think that is one of the the effects on the oil market. If you've got algorithms kicking in when a market crashes like that, you get an extreme move.
Yeah, I mean that's what I was saying. Having traded in it, it just seemed to be, you hit a certain point and suddenly whoosh, it's almost like it just feels like somebody's pressed a button on 1,000 computers and they've all decided to.
Just one simple thing to look at on this oil market at the moment. Here we are with this big plunge, and this oscillator's not even touched the bottom.
Yeah.
On a daily chart, that's a huge, monumental plunge, and both of these oscillators have not gone to extremes. So technically, you're short. So good news for you.
I'm not anymore. I've stopped it now.
Okay. Well, okay. On pure these indicators lag, so that's why I don't sort of put. I certainly would put my house on what the indicator is showing me. But the fact these indicators have not gone to extremes, maybe this is going to keep legging down.
Oh, it's too late now.
But anyway, you live to trade another day, so let's just see what happens. But unless you were in that at a really good level, that was tough to trade.
Well, I think the thing about oil is that, and I've learned a lot about it, but I think somebody said the thing is about oil that a lot of governments are involved in oil, whereas government is not going to be bothered if British Airways, if IAG shares or EasyJet shares go down. But with regard to oil, it has much more political consequences, and so you do get a lot more players in that market, and it's something that is far more complicated than just trading a normal kind of equity stock, and it moves really quickly. So for somebody who's new to this, it was a stupid thing for me to be involved in, to be honest with you. And I think that's what you learn, isn't it? You learn that you should cut your teeth on far more obvious stocks. I mean, TUI, for example, I shorted TUI and I'm fine on TUI because TUI's come down, as we suspected it would. But something like oil, you kind of think, well, it should go down, and it goes up, and you know what I mean? It's kind of complicated.
Yeah, TUI is a good one. I can easily see that coming right back down to those lows again.
Yeah,
and ultimately through that, who knows? That could so easily get through that.
I mean, the ones that I think we talked about, which are probably good shorts, we talked about JD Sports, and that seems to have had a bad hair week. EasyJet is quite interesting. IAG is quite interesting because they're still kind of surviving. Even though the market is going down so much, both of those seem to be having a not such a bad week. But
that's already under the structure. JD Sports. I would.
That looks like it's
again. That could get down to 282 and more easy at this stage.
The only danger with JD's is that if you think Arcadia is almost, filing for bankruptcy, isn't it? JD's could follow a similar fate. I know we'd all love that for Mike Ashley. So
he's a pretty unpopular character, isn't he?
Yeah, exactly. He's like, no, anyone worse than Richard Branson. But yeah, I mean, that's something that I think that, it's already, I mean, I think we said last time it's quite a good short.
Yeah.
And not moving that quickly. And then, do you want to have a quick look at EasyJet and
Interesting how we actually got a higher high here, didn't we? Interesting how we got high, and it's still just, and they still sold into it. Well, I would, yeah, that's an obvious short, isn't it, to me?
Mm.
But interesting that they even managed to. I'm amazed they even managed to get it up there, close to that 600, that that 6 level.
Yeah.
But it's certainly, next stop 4, and that's well, I would. Technically, I would say next stop 4, and let's see if it can continue lower, because that's a nasty looking chart, or fantastic if you're getting a short as high up as possible. What we can want to look at?
The two airlines, EasyJet and IAG. We looked at those.
Yes.
Now you said if EasyJet, last time you said if EasyJet can hold at 580, that it's going to go up to 7.
Well, it's got a chance, yeah. I don't. Nothing's a certainty in trading, but yeah, it's got a probability. I've got a gap down here, haven't we? Of sorts. It's not. Well, it has been technically it has been filled, but anyway, the key pivotal is 550. I can. I just think that's heading for 550. I don't think anyone's going to want to buy unless we suddenly get some unexpected news on restriction lifting. I think that's.
What's it closed out today? I haven't been looking at it.
I mean, at the moment, that's easy. It's at the moment I would suggest that's going to see 550, and like anything else.
580. It's at 589 today.
Yeah, well, it's closed lower. It's engulfed the previous day's price. So yeah, at the moment it's got nothing but short signals.
So again, and it's going to go down to where, do you reckon?
Well, next stop 550. If I'm right, 550 should be seen tomorrow, I would have thought, possibly.
Mm-hmm.
And if we don't close above 550, if I'm right and we don't close above 550, then we're coming right back down to the lows again.
Okay. And IAG.
IAG. I mean that's how I would. I mean, let's clarify.
It's probably not worth doing because it's not going to go down far enough, is it? And it's not such an obvious short as JD's or Next. You said Next.
That's 702. That's not a bad. That's a lovely short up there, isn't it? Right on that 7th of April high. So that's a nice one. It's good. That's a good way to get in these. Just set an alarm for that 700, 702, and just start getting short.
What, when EasyJet gets up to 702?
Well, I think it was. I'm talking about hindsight now. I'm talking about how that 700 proved to be a key area. It's done nothing but drift lower, and the close under this 20-day average today, and engulfing yesterday's price action is suggesting that 550 and lower can be seen on that. IAG. That is a lot better, not by a long shot, but it's better. I mean, we had a bias. We held the 20-day average, and didn't close underneath it today. So this is definitely stronger, but fragile. Very fragile.
Mm. Quite obviously, though.
Yeah.
They've got no planes in the air. Yeah.
No. So at the moment we've sold at 265. Close lower under 212 tomorrow, and we're going to see 190 pretty quick. And if there's no bailout, no lifting restrictions, lower. So.
But if it closes, if it carries on closing up.
If we can close above that 230, and then things could potentially that could signal a decent change. Yeah, we've got to close above 230 to stand a chance of that lifting up, to have any uplift on that.
Okay.
Sometimes these markets know what technical guys look for. They know that if they hold that up into the close, that could encourage people to try and hold this one.
Okay.
But any buy signals in a downtrend, quite often, most of the time, could just be ignored. That could just be the market makers. The market makers are in it for volume. They need volume, otherwise they don't make any money. So these market makers will do their utmost to prop it up, only to sell as it hits further highs, and then let it go.
Oh, okay.
They'll just let it go. They'll decide when they want to let it go.
Who's they? Sorry.
The market makers, the people who actually are paid by these companies, by ICA or IAG to manage their float.
Oh, okay. Okay.
These guys in stockbrokers, if that's a stockbroking firm, maybe for those of you who don't know this, you have in a stockbroking firm, you have what's called a Chinese wall. So you've got the main broking activities on one side of the wall, and then market makers on the other side of the wall. So they'll have contract to manage floats for different companies. So who's ever running the IAG float will sit behind a Chinese wall while they're and the contact and relationship between these two has to be very, very strict. So these guys, basically what I'm saying is these guys are an island. They're a power to their own, and they control the float. And you can see them in level 1 or 2 platform. So you can see the open book that these guys are running, and they'll put fake orders in to hold this up.
I was wondering if that was going on with oil as well today, because
I'm not. Yeah, like I say, I'm not into conspiracy theories. In the futures market is more open.
Okay.
These are commercial organisations who have contracts to run the float. So these are
BP, for example, BA, all the
they'll always they'll pay these various stockbroking companies to sit behind Chinese walls and
if the share price is tanking, they will just push it up to stop it tanking.
Yeah, what they'll do is they'll put fake orders in to hold the stock above a price. And they'll do that, and then when they think they've got enough volume, they'll pull those orders out, and then this will just go. The price will just go, collapse. That's what happens in the mechanics of stockbroking market makers' room.
Okay.
So that's what I'm saying to you on a technical level. The technical level of the guys who are managing the float. They know to do a little sort of higher close on a 20-day average to suck people in, and then they'll eventually 1, 2, whatever days later, they'll just withdraw all their orders, and it will just sink. It'll just go. So in other words, if you're looking to buy a stock and hold it, don't be governed by a buy signal in a downtrend, in a clear downtrend. And at the moment, on a fundamental and technical level, I don't think there's any real. I certainly would not load I might be tempted to take a little small order and see if it closes higher, but I certainly wouldn't put a full position on that.
Okay.
If anything, I would still be shorting any highs. But I'm open to buying it the minute we get some confirmed signals above that level.
Can you have a look at the, can we go over to the States and can we look at some of the...
Yeah, sure.
So some of the ones that we talked about last time, Netflix.
Good old Netflix. Had earnings yesterday or today.
Yeah, but they've had a problem today, haven't they? They had earnings yesterday which pushed them higher, and then they bumped down today because of something happened. They've asked for finance. They've asked for funding.
Right. Well, look at that. Look at that sell. Everyone's bailed out at that extension level. Everyone's just taken profits. Well, I say everyone. The majority of people have taken profits at that extension level.
Well, I think when they got up to the peak yesterday, it was because they've doubled their expected number of subscribers. But I think that there's something.
The problem with their product, with their delivery. Is that what you're saying?
No, there's something in Bloomberg. I just read about them, and
right.
It's in the headline. I'll just look it up quickly. There's something that they're saying that Netflix is struggling, or Netflix is something.
But you know what? The charts tell you that.
Yeah.
The charts tell you that. 432 was a great area for some people to buy. 480 was a very extended level. The charts have priced that in. So the thing with Netflix now is, if the breakout area was 394, the big question for Netflix in terms of their price, no fundamentals. Can they come back to 394, maybe dip underneath it and hold 394, and then go back on another run?
Right, so Netflix is selling new junk bonds even as the company sits on a record high cash balance and turned its first quarter positive cash flow in 6 years. The streaming giant is looking to borrow $1 billion to fund content acquisitions and production.
Right.
It's coming off its best quarter yet for subscriber growth, but that seems to have pushed their price down. They've gone down 2.59% on the back of that announcement. So I think people are just worried that they're overstretching themselves.
Right.
But there's a fundamental between those amongst those two. There's fundamentals affecting peak and the two last entries, aren't there? The 2 last days.
Yes. I mean, it's not a great. It can be quite a choppy stock at times. We had a bad hair day on the 22nd of Jan, but that got bought. Yeah, it's technically it's not a bad stock.
It's also on a fundamental basis. It's a stock that is kind of immune to COVID, isn't it? I mean, if the lockdown carries on for another year, it's one of the few stocks that's saying we're doing really well.
There's a heck of a lot of people trying to adopt their business model and jump in on it. Anything from BT over here and Dish, Disney and Dish and all the rest of it.
That's been going on for a long time. That's why they're so into. But then they borrowed this $1 billion to buy new content. But I think, would you say hold or would you say sell? Or?
Well, I've not been in it recently, but I would have certainly got out of that 480, and I would sit tight and see what happens at 395.
Okay.
See if it gets down 395. By that time, it will reconnect with the 20-day average. And lots of reasons to sell up there. Very extended. Actually divergent on this stochastic is a little divergent up there. Anyway, let's see what happens. Let's see if we drift down to 395 and get bored.
Okay.
Well worth setting an alarm on 395.
And Apple, we looked at Apple last time.
Yeah, there've been some downgrades on Apple, isn't there?
Yeah, Chase advised against buying it, and it has gone down. You know what? My little sort of philosophy about Apple is I actually think Apple products are a rip-off. The first sort of 8 to 10 years of my experience with the computers was completely Apple. I thought Apple was, at the time, in the early days, Apple was way ahead of Microsoft. I thought Microsoft was totally rubbish. I thought Apple computers were fantastic, always too expensive, but well worth the extra money. I think PCs are long since caught up, and Apple phones and Apple computers are just it's a fantastic brand, but I don't think their prices are
healthy. I think they're a rip-off. Anyway, technically,
So the two lines you've got on there, obviously one is the 20, one is the two different averages, is that right?
89 and 20.
Okay, okay.
But based on what 20-day average is standard deviation used in Bollinger Bands, and the 89-day average is one that works in US markets very effectively.
And how do you know which one is which?
Because the 20-day average is slower than the 89.
Okay.
So the 20-day average is always going to be one closer, well, generally speaking, closer to the price.
Okay.
And the 89 is so much slower. You can see it's a gradual sort of trend indicator rather than a price tracker. I'd say the 20-day average is more of a price tracker than the 89. I'm not a massive fan of averages, but they are useful just to get to eyeball the trend, particularly if you're scanning. Yeah, it's had 3 heavy days selling and is struggling. Technical levels, we've got a gap down here, so we look as if we could be coming to close that gap. 244. What do you think?
I mean, I think again, it feels like quite a safe stock for people to buy. You know, because they're such a rich company.
It's got a hell of a balance sheet, isn't it?
Yeah, and the thing is, I think people are looking for safety. So I don't think it's a stock like, you know, like IAG, where you feel that, you know, they could definitely end up in the ditch. Whereas I think
my attitude towards a stock like that is don't short it. You know, don't. Why? That's the most ridiculous thing to. It appeared logically to me a crazy thing to short it, but just wait and see if we can come down to that 245 and buy.
And it's a good sort of evergreen type of stock if you buy at 245, because it's, you know, it's still being affected by the general recession in the market.
Yeah,
it's not going to tank, is it?
Well, I never say that. My mantra in trading is expect the unexpected.
Yes, well, especially in oil, yeah.
Because every now and again it happens. I mean, like 3-4 weeks ago, I said oil was going to be $14. Now, I actually said that tongue in cheek because at the time, you know, I didn't in my rational head, I didn't think oil would get to 4.
And it was 8, and it's 8, so
8 or 7 or 8, but yeah.
So when I bought it at 8, it went up to 30.
But yeah, pure technical. If you take the rational side of your brain and do exactly what the charts tell you, you'll make far more money.
Yes.
At the moment, the technicals are suggesting that could come to 244.
Yeah. Okay. And then the pharmaceuticals, the Johnson & Johnson.
Yeah, I love the pharmaceuticals. Absolutely love them.
Farms and
J&J is too high. Personally, I'm not wanting to engage in that. Gilead had a downgrade. I'm not, just because I had a downgrade, it doesn't mean to say I'm not going to bother with it. I quite often ignore what these so-called stockbrokers say anyway. And many a time I've been contrarian to stockbrokers and made money, many a time. If Gilead comes down to 74 and holds, it retraces all the way back down to that breakup. You know, boomerangs back down to that area there. Get a buy signal down there. I'd buy Gilead. And see if you can get back to 90 and potentially up to 100. Any particular ones you like?
Can you have a look at Tesla? Well, sorry, on pharmaceuticals, the ones you mentioned, you said Regeneron Farms could be about 5.
Regen's had a great time. It's too high. I need a pullback on Regen.
Okay. Vanda Farms.
Yeah.
But it looks like a good buy currently.
I need a, yeah, it's going well. It looks higher at the moment, but I need a pullback. I just hate buying high.
Yeah.
I just won't chase a market. So I need a bad hair day on this.
And you also said GlaxoSmithKline and Pfizer.
Yeah, I've been following Pfizer or buying in and out of Pfizer for quite a while now. Yeah, seeing some profit taking up here. So I would certainly buy 34. It could just continue higher at the moment here, but it's a weird world, isn't it? But ideally, I'd like to see that get back a couple of dollars. I'll keep an eye on it. It just seems at a decent resistance level at the moment. Medtronic, waiting for a pullback on that one. Well, what else have you got? Bristol Myers has had a great time.
Yeah, they all seem to be. I mean, it's probably also. I know we're talking about stocks, but if you're buying funds that are looking at medical, medical funds are probably quite a good fund buy at the moment, I'd have thought, because that sector seems to be doing so well generally, again, against the market.
Yeah. Oh, it's been doing well for a long time. Yeah, it's an aging population, so.
And it's immune to COVID again, because somebody somewhere is going to find the cure, and then.
Yeah.
So I think I still get this sense that US stocks in tech and pharmaceuticals are doing so much better than US generally is doing so much better than UK. Tech and pharmaceutical is doing so much better than everything else, and that's pulling up the Nasdaq and pulling up the Dow.
Yeah, I mean those two sectors are by far the two hottest sectors. They're getting the most volume, the most attention, and so they are by far the better sectors to lock into.
And also US versus UK, even though the pound is weak, US versus UK is a stronger, because it just seems to be coping much better than, I mean, if you look at US banks, they seem to be slightly better than.
Well, the whole biggest, there's so many factors that favour the US and not the UK. So many. There's a list. Dollar.
And now we've got Brexit coming back again, which I think
Brexit cost us quite a few billion last year.
But now they're suddenly saying it's tabled and it's going to be a thing, and that is going to again put pressure on the pound.
Yeah.
But this is all bloody webinar, man.
Yeah. So did you want to ask a question? Did you want to ask a question at all? Okay, let's forget that. Yeah, so so just keep a very close eye on these sectors. I think the US is a lot better place to invest at the moment.
So in your invitation to this today, you said there's some amazing markets out there. So what is amazing in your view?
I just go back to what I started talking about. I think obviously healthcare and pharmaceuticals, that's a given. I think the other.
But they're not good markets for us to get into, because
not at the moment. We need pullbacks. But the other aspect of this at the moment, I think, what's really interesting me is the commodity markets. In terms of, I can try to get positioned carefully in beans, potentially looking at wheat, sugar. I think these are the markets that are really grabbing my attention at the moment, and it's a good time of year. This is the time of year to look at those softs. and try to. It's a good part of the cycle to look at these sectors, and even something like to be honest, I'm nervous about gas at the moment, but because it's cyclically not a great time of the year to get involved in gas, and it's struggled so much with this 20 level. But any decent pullbacks, I'll be watching this very, very closely as we get in April, May, June to see if we pull back to these support areas for a buy.
Okay.
So that's what I think is really. Let's leave it there. I've been talking, just getting sort of a dry throat, and
can you please just do a little advert for all your stuff, your training that you do, though? So
yes.
explain what is available.
Okay, what's available is here on this website, which I will give you a link to now.
Okay.
Yeah, you're selling a product, man.
Yeah, why not? So this is the information. Starter point is for beginners, even for people who've got some experience in trading, done some individual learning. Starter point is still the place to be. If you're interested in day trading, then it's the next list on the next list down, Scalper School. So this is where we are trading. I say full time. We're trading just primarily. It's focused in the US session, and whilst we're really aiming to look at the Dow and the US indices, we're constantly talking about gold, oil, and whatever's an interesting market. So
now, are these courses online, offline?
Yes, they're all online at the moment. Yes, yeah.
And they're all done through Zoom, or are they?
Yes, they're all done through Zoom. Yes.
And they're taught by you.
But they're taught by me.
Okay. And how big are the class sizes?
They're all small. A typical Scalper School program would probably have between 5 and 10 people.
Okay.
It's a 4-hour intensive program, and then you get to come into my training room, the Zoom training room.
Okay. Okay. And so and how long how long did you say it lasted?
It's intensive 4-hour program.
Do you know if the thing there is open upstairs, is on upstairs, the Echo Show?
So it's an intensive 4-hour program and runs on a Saturday morning. You get check sheets and module sheets to go with it to back up the program, and you get a recording of the program. It's basically Scalper School is a very, very tight system. It's about systematically trading the markets. There is a discretionary element in terms of how we measure the entries and exits, but it's essentially a system that's been tightened up over a period of 15 years.
Okay, so with Scalper School, you do 4 hours one Saturday.
Yeah.
And then after that, then
that gives you direct access to the trading room, which is 4 sessions a week.
Okay.
Plus.
And how long are those sessions?
Those sessions normally last about an hour.
Okay.
But when you come out of the session, there is an active 5-day week alert room and chat facility.
Okay.
So it operates throughout the week.
And how many weeks do you do then? If you do 4 sessions a week for 1 hour, do you just how many of those do you do?
I do Tuesday to Friday.
No, but I mean, is it just ongoing, or is it just for?
It's ongoing, yeah.
Okay, okay. So it's really about learning every day for an hour. So it's 4 hours at the start on Saturday morning, and then after that, it's 1 hour a day for
the actual live trading.
Yes, but what I mean is, how often do you keep up that hour a day? Is it every day for as long as you want to do it?
On average, it's about 48 weeks of the year.
Okay, Okay. And
And any weeks that I miss, I compensate members for with either additional teaching or additional training sessions. Training sessions.
And is it similar to what we've been doing here, or are you're actually placing trades then? Do 1 hour per day?
Well, the live trading room is specifically for trading the Dow, for making a daily income by trading the Dow.
Okay.
And some people trade it with futures, some people trade it with options, some people just trade it with a retail brokerage account.
Okay.
I.e. CFDs.
Yeah.
And then, so today, for example, in the trading room, we took a 100 pip move by selling the Dow. Once the 100 pip move was open, I closed the room in about 30-40 minutes, made some suggestions about what you might want to look for or subsequently trade later on that afternoon. And that's a typical day.
Got it. So pretty much you're recommending everybody places the same trade.
I'm recommending that everybody adheres to the rules of the system and trades the system in that session. Yes.
Okay. And how successful is the system?
The system. I had a member with me in the room for about 6 or 7 years. He was an engineer by trade. He back tested every day's Dow and DAX for 18 months.
Mm-hmm.
And he said the system was about 87% successful.
Wow. Okay. So the expectation is that going on this program, then you should. I mean, because I'm just so aware. I have no idea what I'm doing. And so, but also, would the course, hang on this, I'm looking at the other course. So that's the scalper school, is the day trading.
That's pure day trading.
So starter point is?
So the starter point is for beginners, for all the technical knowledge you need to start trading.
And that's going to explain about fibs and things
that
like that.
Explains, that gives you, the deliverable is, again, a system for investing, for buying and selling on an investment level. The deliverable is a system and a template trade plan that you can go away and use and as soon as you come out of the other end of it. So it's beginners, day trading, and then serious professional investing.
Don't worry about that for me. The starter point then, how long is that?
The starter point is a short program run over a couple of evenings with some follow-up support.
Okay.
So if you take a read of what we've got here, you can see the program list, the modules, and the what's included and so on. And like I said, as you walk away with a trade plan template that you can go off and complete.
So how long is that course? A couple of evenings?
That's a couple of evenings with some follow-up, with one-to-one follow-up.
Okay, and do you get access to the trading room as well with that or
not? Not through this. This is just a simple, modest priced beginners that gives you all you need to do to start trading. Then often people, that leads them into day trading on Scalper School, and then the next step up is professional level investing, where we're talking about the whole my version of tradenomics, the correlations in the market, the different instruments that are available to trade, the different markets are available to trade, how to technically analyze, how to combine fundamental analysis with technicals, and to hedge as well. To do advanced level trading, to not just trade, but to hedge a position as well.
And my final question, sorry to ask you so many, but I'm kind of...
That's right, you ask the names right.
The starter point, you said you get follow-up one-to-one. So How much follow-up one-to-one? I mean, how available are you for school?
There's just a couple of one-to-one hourly sessions, and the idea.
Do you do kind of call-off stuff if somebody just wants some help? Can
Yeah, so yeah, I'm available for, but once the program's complete, I'm available for certainly for email and WhatsApp contact.
That's
Yeah,
what I mean. If somebody's like, you know, just
yeah,
I need an extra hour. Can you just buy an hour if you're tired?
yeah, so, yeah, sure, yeah, no problem.
What someone's doing on a one-to-one, because I think if your portfolio gets to be a complete mess, you know, it's a good idea to even to have you review what's going on and just thoughts. Okay.
Listen, what tends to happen is, I mean, I've got people in my trading room who've been trading with me for 4, 5, 6, 7 years. So to stay in the trading room, it's £95 a month. Once you come out, back to Scalper School for a second. Scalper School includes a month in the trading room.
Okay.
Including the price. So you come out of the program, come in the trading room for a month, and then if you want to continue, it's £95 a month.
Okay.
And then, but otherwise, you know, this starter point is literally just to get you going, to give you the tools you need for, you know, simple investment level entries and exits and managing risk, understanding a typical annual cycle and sector selection. But then the whole 360 degree is a completely another, you know, completely sophisticated level on top of that.
How big a portfolio do you expect people to be investing to, you know, I mean, Scalper School, you're saying that people should be, you know, the idea is that people do it for a living. What size portfolio are you looking at, and what? In
terms of value or in terms of number?
Value, yeah, I mean, sort of.
Well, for even something like 360 degrees, there's no reason why you couldn't start with just a couple of thousand.
Okay.
Because of you can, if you're trading CFDs, you can get access to some leverage. I'm not for what risk management is central to everything we do. So the last thing I do is to get somebody with a small account and take, you know, abstract positions and, you know, positions that are way out of normal risk management criteria.
I'm just trying to get a sense of what the sort of return would be, and what you'll say, you know, if you're saying, I mean, if the suggestion is, well, you can actually make a living out of this, and I'm just trying to work out.
Yeah, that's the whole point of particularly Scalper School is to make an income as a day trader.
Right, and what sort of income?
Well,
depending on what you've got to invest, but I mean, if you said, you know,
you should be looking to make in an average month, you should be looking to make anything from 5 to 15% a month.
Okay. So in other words, if we say sort of between half as much as you invest and 1.5 times as what you invest in a year, is that right?
Yeah, I mean, if you look at well, I'm phasing this website out, but if you look at the scalperschool.co.uk, what I was doing here, the reason why I'm phasing this out is because it's not compliant. I'm just doing a deal with a big American broker. But on here, on this profit and loss tab, for my day trading, once I get the data to come up, you can see I'm making sort of in a day 700, 1,000, 500, 300. You know, just depends on how good the days are.
So you're going to make 2,500 today.
Yeah. This is
going to make 2,500 instead of which I lost 2,000. Yeah.
Yeah. And there's some big numbers, some small numbers here, depending on whether the markets are choppy or. There's a screenshot of my futures account. Yeah. That must be, it's oil, I think. Yeah, that's oil.
Yeah.
So anyway, I'm phasing this out because it's not compliant.
Yeah, but you could say, I mean, to say that if you invested say 20,000, that you should, you could be making 5% of that, between 5 and 15% of that per month. Sort of thing.
If you follow the rules, yes.
Yeah.
You've got to be prepared. The basic criteria, particularly Scalper School, is to come on the program on the basis that you'll learn the rules and you'll use them every day.
Okay.
Because what we do is we do the same thing every day and expect the same results.
And you're really not looking at fundamentals. You're just interested in technicals. Yeah.
Yeah.
Okay. Thank you. That was really helpful. It's good to know it's good to know exactly what is involved.
Okay.
I think I shall sign up. I think
Good. Well,
the market has taught me today.
Yeah, I mean, from what the conversations we've had, you've got the makings of a good trader. If I can bring you into line.
Yes, exactly. Well, I don't know what I'm doing, so I'll happily be brought into line because I have no idea.
Well, but I can sense from your thinking that there's some elements of your thinking that I will incorporate in my trading. But I just need to overlay the mechanics of the market, the technical mechanics of the market.
Yeah.
Once you've got that, then and you stick to the rules.
I also need to stay away from oil. I mean, I actually started with 10,000 in CFDs, and I've managed to lose like 7 of it now. But
yeah,
but
well, coming on a program
is because I lost 7 on oil. I've lost all 7 on oil, and I keep saying keep away from oil. I nearly made 5 on oil today, but I've just got to keep away from oil. Oil's just not.
You know what? I in day trading, I cut my teeth on oil and soybeans back in.
Yeah, but I do it with someone like you standing next to me because you'd stop me from making these stupid mistakes. But when you don't know what you're doing, and you think, hey, this is a surefire bet, and you're placing big trades that you shouldn't, you suddenly find yourself getting. I mean, I know I lost 4,500 in 4 minutes because the market just moved against me and it moved down so quickly. And again, this is these computers. I didn't know that these are all automated trades, but it stands to reason. It hit a trigger level and suddenly every computer in the world went ping, 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 place a trade, and off they went, and it went against me. So
yeah, take a look at this is what I came into this week with oil. This is a 1 hour chart on oil. That's what I came into the start of the week with.
Okay.
And I was saying to everybody in the group, whatever happens with this pink area is going to determine the direction of oil.
Yeah, I mean that's the thing. That's the main thing I'm hearing, that it's really the technicals are far more important than fundamentals, and that's my problem. I'm looking at fundamentals.
I mean, my journey into technical trading was not smooth because of my age, and I started trading on fundamentals. So it was a big shift. And I had a trading buddy at the time. He and I were just met on a trading course, and we worked very, very closely together for a long, long time. And he was one of the factors. I mean, I was mentored by some top US ex-pit traders and some excellent UK traders, and these guys were just doing pure technicals. One or two of them didn't even understand fundamentals. My trading buddy had no idea about fundamentals.
Yeah.
So they helped me make this big transition from fundamentals to pure technicals. And one of my mentorees, one of my students, I actually taught him a few years ago. He's an entrepreneur, went away and set up many, many businesses and made lots of money. And of course, with the coronavirus, is coming back to trading.
Yeah.
But one of the things he said to me today is, you literally do not need to know what the news is saying. You literally do not need to know what the news is doing.
And if it's and that's the trouble, because it Yeah, and also the news changes in markets like oil. The news changes, doesn't it?
Also, I just a point from the side. I don't trust anything the journalists say anyway. I've been on BBC 10 o'clock news and Sky News and all the rest of it. Not for a long time. This is it's too time consuming. I've been on the Jeremy Vine show, all sorts of things. The problem is these journalists are so lazy. You get on a list, when a subject comes on their desk, they just ring people on their list.
Yeah, sure.
They don't talk to people who are genuine, postgraduate experts on certain subjects. They talk to people on their list. So when you're listening to the news, you're not getting most of the time you're not getting a coherent, thoroughly researched feature. You're getting somebody who's on the list, the personal views of somebody who's on the list.
Sure. No, I hear that. Okay, brilliant. So you think that probably the first thing to do is the starting point, and then the next one will be the
and then move on to scalper score, And then in the meantime, you'll get the key nuggets of information for
but this course, when is the next
high level trading, and then it's
have you got one scheduled? It says the 6th and 7th of April.
I've got up to date. I'll update that tonight, if not tomorrow. But I'll drop you an email.
Thank you.
I've got your email address, so I'll send you a follow-up email that you can
Thank you, Mike.
give you specifics and things to think about.
Okay. Thank you very much indeed.
No problem. Well, have a good evening, and I'll catch up with you soon.
Yeah, I'll speak to you on Sunday. Sunday,
Okay.
is it 7 o'clock on Sunday? Yeah.
Yeah.
Okay. Thank you.
Yeah. Bye.
Thank you. Bye bye.
Hi, Bill. You've just come into the room. I'm just literally just about to close up. Are you going to come back into the? You're going to come in the training room anytime soon, Bill? I'll send you the recording because I'm literally just about to go away and eat. We kick off this Wednesday session. Kicks off at 6, and the Sunday session kicks off at 7 in the evening. So I'll finish up now, but I do let me know if you want to come back in the room sometime soon. You hearing me, Bill? Your microphone's turned on. Okay, I'll drop you an email, Bill. I'll drop you an email. Thanks for turning up anyway. Right, I'm going to go to eat because I'm starving. So thanks everybody for coming, and I will talk to you very soon.
Thank you. Bye bye.
Okay, bye.